Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Yep. Good morning, everybody. Man, I was not ready to turn the microphone on there. Hey, you know what? I am... Okay. This market was already... Today was already going to be kind of like, I don't know, guys. Like... The options expiring, no news, options expiration Friday, kind of, and the market's been acting kind of, sketchy on options expiration. So I was already coming into this like, I don't know if I really want to touch it, And then this freaking happens. Look at these treasuries, all of them, big. I mean, okay, it's not quite as big as that big doozy that we had after the CPI, but come on. It's a good half a point there in the treasuries. I mean, like, we increased like eight basis points or something like that. So apparently Austria has said that they're going to go into lockdown. And Germany said, they're not ruling anything out, quote unquote. So that, I believe, is why the markets are doing what they're doing right now. So there's the treasuries, equities over here, down, but not nearly as much. I don't know. This I have to say, this looks overblown. I don't think I want to fight it today, but this looks overblown. This looks like you really think that... Oh, hold on. There's a mosquito here. I'm going to get the mosquito. I gotcha. Yuck. Yuck. Anyways. I think that this comes back because there's no way that they're going to stop the tapering or any of that. Like if there was another COVID wave in the United States, and even if the United States needed to go into lockdown and we pushed the yield back, I think it would be such a disaster. Like we're already having these inflation problems. I really don't think that you can keep these rates, continue to keep rates low. You're going to have to take the pain at some point. So, but then, the S&P 500 isn't really reacting all that much. So oil, it's time to move oil over to roll over. There we go. It's time to roll over the oil, but you can see they're down. Natural gas still in the range. Gold and silver, I thought that gold and silver would be doing a little bit better than they are right now, but yeah, there's concerns about global growth here, right? What about the bitcoins? The bitcoins continue to be down. That's a problem. I mean, it could be options expiration. Let's see if Bitcoin, after, it might continue this because of this COVID and all this other stuff. And next week is a half week because, it's Thanksgiving, right? So I'm a little, I don't know about next week. This might continue into next week. There's going to be a big unclenching on Monday, and that could lead to some downside in certain things, okay? But if we get into the week after Thanksgiving and Bitcoin is still down, I think that's a really big warning sign. And by that time, we might also know the numbers on Mt. Gox. So I think it sucks, but don't have enough information to try and make a bet in Bitcoin there. I see E-mini trying to make a rally here, but oh man, and these treasuries are going to be very volatile. I think you can just see, having already traded in the first 10 minutes, I'm behind today. I am so far behind today. I feel Why am I trading today? I'm honestly, I don't think I'm going to take a trade. I hate saying that because it's like, oh, he's not going to take a trade. I don't go watch. But I'm not sure I want to touch this. Not with a live order, at least. Not with a live order, at least. I might. This might be a good opportunity to try and take one tickers in the treasury. I don't know about that one though. We're gonna code sell the 30 there. Like the thing is because of the way that the market reacted to Austria going back into lockdown, there's going to be volatility. So I'm sure that people are going to make money today. I'm just not sure that it's going to be an opportune market for me. And I'm not sure that I am in the right state to do it. Maybe I get locked in. Maybe I get locked in and then do it, but like so far this morning, I am just feeling like incredibly unmotivated. So, and they just kind of threw a wrench in there that's so unexpected to me. I'm really not sure what to do about it. You know, I'm worried that this becomes a market that just kind of thrashes us around. You know. I got something stuck in my tooth. Hold on. Anyways, markets only go up. Yeah, that's what they said in February of 2020. Could have held through it, I suppose, but I wish it was that all markets always go up all the time, but it's not so simple. Nah. See, Eric Cages is here. He just wants me to do degenerate gambling. That's what he wants to see. I did one with the robot, and it actually I got really close with that robot. If right now would probably be the absolute wrong time to try and use it, but after the holiday in December, might not go so bad. I have the better robot. The better robot could probably make it too, but I'm not 100% satisfied with the way that he performs. He is a little bit too against the grain. So yeah, I am working on getting like a neural network setup going. And I think I had a little bit of a breakthrough last night. We could maybe try messing with it today if we get bored. Because I had missed. I went back and reread those threads because I was trying to get the RCP calls to work. And I went back and read those threads and realized that somebody had said that they switched theirs over to using just a socket, and that it was pre-performant with a socket. So I think I took their a neural network. Yeah. So we want to use TensorFlow. So this is how this is kind of how Facebook, for instance, learns what you like and decides what to show you first. These are the sorts of algorithms that TikTok and all of those social media networks run off of. And I believe it was Google that created this, where they basically created a framework where you run TensorFlow in like a server, and then you can make calls to it and create these neural networks. Yeah. So the idea is that if we combine our signal with a neural network and bring in a bunch of other factors, that it should be able to pick much better entries. Because the issue with the strategy is that it is very much against the grain, and so it will get stopped out like multiple times in a row. So when we do the back tests, the long-term expectancy of it is actually really good, and the performance of it seems to be in line with what the backtest was. I was just like, I didn't realize how often like a 3-time in a row loser was, and I'm not very comfortable with that. Like, I just feel like, oh, we could do that so much better, right? Like here in the treasuries with my own trading, we haven't been getting that at all. Hitting a fairly decent win rate. When we do lose, it's tiny. It's about time we got rich. Well, we've made some money on things. I don't just do the futures trading. So how far did I backtest for that one? I was only able to do a year. Yeah, because it's using tick replay, and tick replay takes forever, and the broker will tend to only go back a year for tick replay. For Rhythmic, I can go back a little bit further than CQG. But the thing is that I really want to incorporate like the level 2 stuff into it is kind of what I'm looking at. So I might need to do some weird things though, like find something that will be like, what was the optimal entry, so that the neural network knows what to compare against and try and find. Yeah, it's primary that the base signal for it is like really stupid simple. It's just like a rolling window of volume. So the imbalance between buyers and sellers on a rolling window. It has to be. Well, I mean, it doesn't necessarily have to be. One of the things that I hear a lot from people. I just heard that I do weird things. Anyone know what did I say? Anyways, no, there's a strong desire within the trading community to have setups that are really simple. But the reality of markets is that any kind of signal is going to get arbitraged out of the market very easily. So you really have to have a lot of nuance, I think. I think that the more sophisticated your analysis can be, the more the better of a chance that you have of getting it to work. And one of the problems that people will have is they'll be looking at so many different things that they don't know what to do. But I think that is really more a factor of looking at things that just don't matter. You're coming in and you're looking at like, what is this moving average doing, and where was the yesterday's point of control and the value area and all of these sorts of things, And I really don't think that those are as useful as people think they are. Like a big one that is really grating on me lately is the market profile setups. Well, Monkey Gain says he uses market profile, so there you go. I mean, if it works for you and it's been working for like years, then go for it. But one of the things that people will do is they'll say, we're within yesterday's value area, and ergo there's an X% chance that we're going to touch the point of control, for instance. And really the stats that people are pulling out on that are just based off of, what the volatility is at the time. Like if the volatility is that much and you didn't move very much overnight, then of course, just because of the range, the chances that you're going to touch it are going to be good. But whether it touches it within the risk parameters that you have set is a very, very, very different sort of a thing, right? And when you try and do those sorts of trades algorithmically, you say, okay, here's the beginning of the session. Buy it here. I have a set stop and it doesn't work. It's not even close, right? So there's a real problem with those stats because they do not factor in risk reward. And so, people will see a bunch of different things going on and they're not sure what to make of it, right? Whereas what I think you can do is you can have a very sophisticated analysis where every piece of the puzzle that you're looking at is something that from empirical research is a strongly consistent behavior in the market caused by the structure of the market. And this is where we're talking about volatility, order clustering, square root law of meta order impact, inverse square law, and liquidity holes. And these are 5 proven structural behaviors in the market. And they will all coincide with what you're going to see in the order flow, because what you see in the order flow are really just pieces. They're just like little samples of the overall liquidity conditions, and those overall liquidity conditions should match up with those larger behaviors that you're expecting to see. And then you can say, does that match up with my fundamental thesis? The thing that I'm looking at that says how many orders are going to come in today, and thus are we going to move up or down? And when you take all of that into consideration, you get a much better, you have a system that you really don't have to think about. Like it's really complicated, but because it all supports each other, when it's happening, you don't even think about it. You just click, and it happens and it goes, right? So you can basically eliminate the downside of the complexity, right? If you really have a consistent system, it actually eliminates the consistency and allows you to execute it efficiently, because that's the downside of complexity is, can you execute it well, right? Also, thinking about it at the beginning and knowing what you want to do is a big deal. You can find the same structure in the big, but here again is where I'm like, okay, you could, but one, the people that I'm seeing talking about volume profile are not talking about those structures. They don't understand that math. They probably don't even know that those structural inefficiencies exist. Number 2, there's a lot of things about the way that the volume profile is constructed that will hide it. Like there's too many edge cases that you have to think about where it's like, okay, was that price a key price because a liquidity hole happened there, or was it because that was where the session closed and most of the volume comes through at the session close? It's just there's a lot of things like that where I think that as you're watching the volume, like here on the Treasury right now, having seen all of the volume that went through at 03 and 02 half, right? Pretty good chance that we have a little bit of a liquidity hole right here. Okay. I'm not really seeing it in the bid and ask, but maybe it happens. Maybe it is there. Maybe they tick up to 03 and they only stack a little bit there, and it's like that. You can see it there in the volume profile right now, right? But as more stuff happens, and depending on what happens, it can become useless, right? And how do you deal with that? The profile, the kind of analysis of profile that I've seen is not sophisticated enough to sort that out. You know what I mean? But I don't know what you're doing. But like the bigger thing is that man, like this whole thing of like, yesterday's value area and all that sort of thing. Like I do see markets seem to respond to these levels for sure. When I'm watching it, I can see it. I can see that like the market gets different around these spots and there's things like that. But when I backtest it, the backtest says is really not a reliable thing. Even if I do like for instance, single prints, I tried making a trade that was like, okay, when you get to a single print, do you have a possibility of it reversing? And it was like, well, the stats were kind of weird. Like it kind of showed that the market is doing something there, but it also kind of seems like that the market is really efficient on it's very statistically efficient, and that it has a way of arbitraging these things out. And I really think Net Trade Nasdaq Trader says no. Do you remember what I was talking about, the interest rate going down? No, I don't. I have to say, like, with the interest rate going down today, I really don't think that that's gonna last. So how do you use it, Monkey Grains? Because here's the big one that I am like, okay, and anything that is like X price was important in the past and therefore it will be important in the future is total bullshit. Like all of the research that I have done says that trying to use past information to make a determination about what is going to happen in the future, and you're only using price and volume, it's not going to work. Straight up. And if you're really taking into account like full order flow, and that means that you're taking into account price, volume, and the level 2, it will be hard, but you might be able to find something. Those inefficiencies are not as well farmed, but it's still difficult, right? But on the other hand, the market is very not informationally efficient. It's pretty statistically efficient, but it's not informationally efficient. So if you take something, and here I would say that like reading of the liquidity is something that's really helpful, because it can help you execute. It can tell you where might be an optimal place to execute. Like if I want to go short, I'm not going to go short at 0.2 right now because there's a liquidity hole between 0.2 and 0.3. So if I'm going to go short, at the very least, I have to do it at 0.3, and better yet, I want to do it at 0.3, right? Because what I would hope to see is them come back across that liquidity hole. But I'm only going to do that if I have a reason to think that there's going to be selling today. I have a reason to think that I can predict what the future orders are going to be based on, some sort of a metric about the amount, like today, for sure, it would have to include gamma, right? Today, I think if you're trying to make a call about what it's going to do today, whether it's going to go up or down, and you're not factoring in the gamma, you're probably doing it wrong. You know what I mean? So that's why I say we can use liquidity, because liquidity is like very empirically proven. And we can use informational inefficiency because that's going to yield a lot more for us. Interesting theory. And the theory that markets are statistically efficient and not very informationally efficient is very consistent with the research studies that are out there. This is where I get like, like there's a lot of good stuff out there, and there's a lot of, especially for beginner resources, setting people up for like, how do you deal with multiple contracts? That's one of the things that I don't think we talk about very often, because so many people are just trading one lots. I mean, I like to trade one lots, some two lots if I'm feeling good. So there's good information on that, but then it's like you don't really go further, and we don't really go into like the more serious research. It's like there are dozens of research studies released in the trading and market microstructure category of quantitative finance every month where they empirically prove things and things that you could potentially use in your trading. Yeah, you never see retail traders talk about this stuff. When you're taking multiple contracts and you're scaling out, you're taking on risk by doing that. You're taking on more risk than if you were all in and all out. And I don't think that a lot of people understand that. I don't think that a lot of people understand like what that does to your stats, because when you do that, what's going to tend to happen is things are going to look really good, but you're not really going to know the full expectancy of the system for a long time, because the higher the kurtosis is of the system, the more samples it takes in order to see it. And so they'll be going along for a long time, think that everything's fine, their strategy is perfect, and then the fat tail comes and destroys them. You know what I mean? It's that sort of a thing. And I just keep asking myself, like, why in the retail trading community do we never go further than that? And I'm not really sure I can explain why, other than that a lot of the information that is really out there, that is reliable and is backed by research, just absolutely obliterates everything that we want to believe about markets. Especially if you believe in technical analysis, you know? Monkey Game says your trades don't last longer than 3 minutes. You were saying you can explain in text, but it'll take you 2 minutes. I'm waiting because I want to know how you try and use it. Because there's only two ways that I've seen people use. Well, we've had this discussion before, haven't we? Maybe it was somebody else. I remember having a very similar discussion. Like, it's either you're using the previous, point of controls and value areas and highs and lows, and you're doing some sort of stats about whether we're likely to touch those. Oh, you can't explain it in 2 minutes. Or you're like looking for steps in the profile. Yeah, he says no on the first one. So then the second one is that you're just looking at today's profile, and you're looking for statistical aberrations in today's profile. Like, there's a step in the profile here between 03 and 03 half. So if we step up to that price in a certain way, I might be more willing to buy and sell it. So Monkey Game says, if we are trading above a prior range high, only look for longs. Well, okay, that's fair. That's kind of more along the lines of category 1, but if we open in prior range, it's more likely to range. It's not the same stats that I was it wasn't the same stats that I was listing, but it's the same kind of a framework, right? You're using where we are now compared to key levels from the past to make a determination about what you might want to do. Which, I don't know. I'm not going to say that approach is completely invalid. I'm not going to say that approach is completely invalid, but I do kind of feel that you're probably going to need to use a little bit more than that. Then you use momentum and order flow to enter. Well, there you go. Yeah, but then, so then what we would have to do, Monkey Games, is we would have to like look at your longer term stats and look at them, right? This is where it gets hard, right? like for me to, this is the way you should think about it. Like, think about your strategy in this context, okay? If I wrote my strategy down and took all of the stats that I had and submitted it to XARIV, what is it? Okay, you're a funded trader. That's definitely a plus. But you go to ARXIV .org and you write this paper up and you submit it. Of course, you have to get credentialed and everything else. But if you were credentialed and you submitted it, would that be something that you would be able to submit to like journals and to say that like, okay, here's a system of things that has, you know, that works well, and here's everything that we know about it, right? So you're funded, that helps. But you remember also that being funded very aggressive targets, right? So now if you're funded and you've been funded for 2-3 years and you stayed funded that whole time, then I would be like, okay, now we got to look at the stats, because that shows, okay, you have a good system, but now we need to look at the stats to see if it's actually appropriate for this person. Now, if it's appropriate for a Combine account, then probably most retail traders would be willing to try it, right? Because I think most retail traders are trying to go for, could it pass a Combine? I know that's always what I was always trying to do, right? But I realized that they were kind of putting unrealistic goals in front of me, and that trying to chase those unrealistic goals was actually harming me. Like, I can come in here and do these treasuries, and it's been like what, 8, 9, 10, 11. So it's almost been 4 months now. It's been 4 months now, and I've been doing pretty okay. And I would be doing like really well if it wasn't for me being stupid like twice. There was two times. Well, actually, I wouldn't even say 2 times, because there was one where it really didn't work out well for me. That was last Friday, actually. And at the time I was like, oh, I was so dumb, and why did I do that and everything? But when I look back at it, it was like, it actually wasn't so bad. And like, that's probably the most that I would be willing to lose on a single trade or day. But it was within the allowed parameters. The one before that, when I was doing some spread trades, and I took a number of bad trades in a row off of this spread trade that I had, that I screwed that one up because I was experimenting with a swing trade, and it didn't work. Is that as salty that they didn't send him the Combine coupon? Well, no, you missed it, Air Cages, because for not Top Step, but for I can't even remember now. We did a sponsored video with one of them, and they gave us a Combine with free resets to test their system out. So can't experiment on a Combine. Well, I did it. I mean, I did it on my live account. I would say it turned out fine. It's fine. The problem that I'm dealing with now, I don't know if it's a problem, but like, I'm just kind of looking at this. Part of what's going on here is that like, a lot of my approach has changed in the past year. I mean, that's always happening. I'm always improving things and making them better, but around the third quarter of 2020, I made some pretty big strides in understanding the market. Spent most of the next year trying to sort out how to use it, and I was trying to use it in equities, and I had some success with that. But I'd still, when I trade the E-mini man, I'll just, the number of times that I get stopped out, even if I have like a good stop and it's based on the range and all of those sorts of things, I very often will get into a spot where they'll stop me out, and the amount of times that I stop out is too high. But then the micro treasuries came out, and I said, well, let's try doing it on the micro treasuries, because then like there's no pressure or anything, right? So small amounts, no pressure. We can do this forever, and we can just get good at it over here. And since I've been doing it in the treasuries, now in all fairness, the treasuries have been moving really well ever since the micros have gotten out, and the treasury market is giving a lot of good opportunities. And I think that given the situation, that the treasuries may continue to give a lot of opportunities for years to come. So I think we're okay in that respect. But we've been doing really well, and we're kind of now, I think, in the process of like really trying to key in on certain things. Like my framework does a really, really good job of telling you, should you go long, should you go short, and getting in a location where you're not going to take as much heat. That has been working really, really well. But trying to determine how far we're actually going to go has been something that I've found very, very difficult. I've left a lot on the table because because I got out too early or too late. So if you looked at Mbox, that sounds familiar, but I've never looked at it. The strategy itself. Yeah, your system needs to be airtight. That's how those companies make lots of money. Yeah. Well, and I'm telling you, the targets they got aren't realistic. Like this is what bothers me about the combines is they're not looking to get somebody that they trade every day and they're mildly profitable all the time, which is what I'm trying to do, right? They're not. You think that that's what they're going for? Like that kind of seems like that's what they should be going for, or I don't know. Like we just assume that that's what it is, but it's really not. What they're looking for is the hot hand. They want somebody that's hot, and they're going to be making money for like the next 6 months, and then when they blow up and they're done, right? And they want to make money from you while you're hot during that time period, and then after that, you can try again. You know what I mean? That's why the targets are so aggressive. Because if they were really just looking for like very consistent traders, it would be a lot less aggressive than it is. If quant trading is the best, then why does Citadel derive its mean alpha from buying flow? Well, who said that quant trading can't be based on buying flow? But one of the things is that buying flow can mean a really wide range of things, right? Okay, I'll be back. Thanks for talking to us. So how it can mean different things. So like one thing that you could do is you can just buy the privilege to execute their flow. Like that's what Citadel does with Robinhood, right? Is that where Citadel makes most of its money? Probably. But what they're really doing is they're being market maker, and they're kind of giving themselves an unfair advantage as a market maker because they get to see the flow first and then decide to act on it or pass, which I really don't think is fair. I really think that sets up a conflict of interest between, because the what's in the customers should always just be like, what's the best execution? And for them to be able to go and say, well, I don't want to take that adverse flow. That seems like that's too much. I'll let the market eat that one. Like physical arbitrage between stock exchanges. That's another one. Yeah. But, let's take it back a second, because I think what a lot of people are thinking when we think about quant trading, well, it still does have to do with statistics. This is the thing you got to understand, Nasdaq, is that even doing that requires a lot of math and really sophisticated systems to do it. Okay, they're still using the machine learning algorithms and all of that, but what you want is this setup that when I see this particular signal, it gives me a certain percentage chance that we're going to move up or down, and I'll see that a certain number of times a day, and it will be consistent enough that I can always handle the drawdowns and make consistent money and pay for my bills every month. That's what you want, right? And that's kind of the funny thing about it, is that when you go out into the industry and you start to look for those things, you start to realize that all of the big players in the industry choose strategies that avoid having to make those kinds of calls almost universally. And the ones that don't are going to be more like your hedge funds, right? So, Renaissance is probably a better model for you, right? That Renaissance seems to have some setups that would be the kind of setups that we would like to use, but we have no clue how it works. And people have been trying to sort it out, but they've been very tight-lipped, and even there's books about it, and the books don't really help you all that much. but they seem to have, maybe they have some information that a retail trader could trade on, and it would be useful, maybe. but that's just kind of like the thing, is that as a retail trader, you think, okay, I want to make money. I don't know how to do it. I'm new at this, whatever it is. I should look at somebody else that's doing really well with it and do it how they do it. Because that's the way that people work, as we're social learners. We watch other people do things, and then we learn how they do it. Entrepreneurship in humans is kind of a special thing. It's not the default case for the way that humans work. Unlike, say, for instance, an octopus, right? Octopus is the exact opposite. Octopuses, they don't have, their parents don't raise them. They avoid pretty much every other creature except for when they're in the mating season, and everything that an octopus learns, they learn on their own. You know, and then that gets passed down in genes. Octopuses are entrepreneurs. If you've never watched this movie on Netflix, My Octopus Teacher or something like that, such a good documentary, by the way. Okay, but anyways, so we come in and we say, okay, so who should I watch? Well, I want to watch people that are making money trading their account. Who's doing that professionally? And so we go and we say, oh, prop firms, right? Prop firms seems like the natural one to duplicate, right? But here's the thing. Prop firms don't really exist anymore. Like there's Axia, and they're it. And by the way, Axia does a lot of education stuff too. They don't always, I mean, I've been told a few things about the way that Axia performs, and it's really quite impressive, but they don't make money all the time. Sometimes they have really bad days. It's high risk. It's a high risk strategy. When you're doing high risk, you're gonna have some bad drawdowns, which is like those drawdowns are probably worse than what most retail traders can do, right? SMB, yeah. It's not like the 90s though. Like you got to realize, in the 90s, it used to be you would go downtown in your local city and there would be an arcade where they would set you up and you would scalp stocks. And that's the way that things happened in the 90s. Like that's how Futures Trader 71 got started, right? There's a reason that doesn't happen anymore. Like the market changed, and a lot of the edge that the prop firms of old were making money from, the robots really killed them. It's just, you know, and part of the problem that we have right now is that we were at the tail end of that, right? Like when I started trading, it was kind of like the tail end of that, where I could go and I could watch the treasuries and I could see how like the setups kind of worked, They kind of worked. But then I would look back at it and I'd be like, well, yeah, but if you look back all through, because I started doing it in like 2016, right? And I was like, well, if I had traded through 2008 to 2016, then I might have done okay because there was a lot more volatility in the treasuries. Once Donald Trump got in office, like the volatility started to contract and that wasn't there anymore. And then all of a sudden, the competition with the robots started to become really clear. It was like, a tick here and a tick there and you might be doing okay, but otherwise it's not enough, right? And it's taken a while. I think it's taken us a few years. At least it took me a few years to finally admit that those particular things, they have edge. Like you should know them. You should definitely know them, but on their own, they're not enough for you to make money. So once you go to that point, you kind of got to look back at your system. Where's the money being made from, right? Well, the money was being made from being able to play the queue optimally. And now there's too many robots for you to be able to play that. Okay, so you can make money from taking on risk. Like that's what a lot of people are doing in the S&P 500, right? They might think that it's because of their set at their signal or whatever, but the reality is that they're profitable noise traders. And I think that there's a lot of those. In fact, I think that the most prominent people that we've seen that people think are making money is probably just noise trading. Okay. So if there's problems with taking on risk and that's not for all investors, like if you're trading on micros, it probably means that that's not you, right? You'd rather be somebody with, like a 20K account than starting and trading full ES, right? Which apparently is not most of retail traders. So I say that the approach that you should be going to, like if you're going to look at somebody else, is I think that you need to start looking more like a hedge fund. Does that make sense? So now hedge funds tend to do longer term trades. Okay. But I think that you're looking for that sort of a thing. You're going to look out at information that's not necessarily being given to you from CQG. Okay. That can predict future orders, right? Like Gamma is probably the best game in town right now is Gamma. Like in the late 90s, early 2000s, there's all these people that had made amazing profits through electronic trading. And it was because they were using the book and they had kind of found all of these tricks with the electronic trading. And then the robots came in and ruined them, right? The game right now, it's Gamma. 100% it's Gamma. If you're trading ES, you're not factoring in Gamma in some way. And I don't think that you have to look at it every day, although I'm kind of starting to wonder, maybe if I had a more sophisticated way of looking at Gamma, that maybe I could have success with ES. Right? That's the best game in town. But then I think that the future is going to be the future predictors of order flow. Making the market more informationally efficient. That's the game that you want to be in, I think. And so in that respect, the majority of retail traders, they're looking in the wrong spot. You should be reading research studies and trying to, do a statistical analysis of some sort of economic metric and how it affects the market that you're trading and doing that sort of a thing. Rather than, all of this, well, the things that retail traders tend to look at, right? That's why I've kind of gotten into like, the NinjaTrader backtester is great, but I need to take it a step further now, right? Is a bear market close though? Everyone keeps saying that, which makes me doubt it. I don't think so. I think that I can't really see much more than a quarter ahead, I think, on most things, but in terms of like, is there a recession imminent? I don't think that there's a recession in the next quarter. So I am concerned about long run inflation expectations. But okay, so that was an interesting decline there. Oh, by the way, I don't have my on my news squawk on. So was there a piece of news? U.S. Labor Secretary Walsh, inflation is real. The administration is striving to address it. Okay, so that is why they are moving there. Yeah, I am kind of paying attention. I mean, okay, hold on. Okay, that one doesn't matter. I don't know if that's enough to make me want to just like come in and hardcore sell it or buy it. Like I think that the trade here would be like buy one spot 555 and maybe if we got a big move we could get one spot 6, right? The problem here again is because of the daily context, you could get big pullbacks on this. Like this move might be like a really dramatic move that completely retraces. Because I mean, the overnight move up was a pretty dramatic move that is retracing hard. And they're kind of they're like two completely unrelated and conflicting narratives. One, COVID lockdowns, and on the other side, the specter of inflation. I'm not sure which one to go with right now. It's a hard call. I guess if you had taken it up here at 10, then you could let it run. But now that like the initial strong move happened, I don't know what to do. What did it move on? No. So the reason that it rallied overnight was because Austria announced the lockdown and the German government said that they weren't ruling anything out. So it was concerns over lockdowns in Europe that moved the interest rates down so much overnight. You smell what I'm stepping in? So now I'm pretty sure that what we just got there was the Biden administration saying that they are going to tackle inflation. Okay, I don't know if that's really a big enough one to like get things to move, but because we have the volatility, you get that, right? That's why like I'm not sure it could flip around here. It could flip around hard here. I mean, that was a pretty good uptick, for instance, right there. But like kind of seems like the vaccine didn't work out, but what the hell do I know, right? I'm really getting frustrated with the way that the news reports on the vaccine, because the way that the news reports on the vaccine is, this person that didn't like the vaccine is in a hospital, and there's all these people that they don't want to take it. What they don't report on is that in the United States, 80% of people have been vaccinated. It's like literally 80% of people in the United States. Like, you realize that? 80% of people. And we're still having outbreaks. Well, probably because there's waning immunity. The vaccine does not provide as long of immunity as we thought, because we kind of rushed the trials, right? Like the trials that we did, they were like, well, 9 months later and they still have immunity. So it looks like the immunity is really, really good. And now here we are a year and a half later, and then everybody's getting sick and they're like, oh, that wasn't good enough. Right. No, I don't. I think that, Lucas, I really think that that's all just clickbait, right? So it's all just clickbait. The problem is that the duration of immunity was not as strong as we thought. Like, we thought that it was, okay, you get it, now you're immune and you'll be immune for life. And we're looking at it now and we're realizing, like, that's not how it works. And it probably turns into, like in all seriousness, I mean, the CDC hasn't said this yet, but my guess is that what it's going to turn into is like the flu shot. You're going to get a booster every year. Every fall, they're going to come around to your work and they're going to try and convince you to get the booster shot. It turns out natural immunity was more. Yes, that's true. That is true. But even with natural immunity, I've seen evidence that the natural immunity is not as long lasting as they had hoped either. Like I think, based on what they're saying, if I had strong contact with somebody that had COVID right now, I would probably catch it again, although it would be less mild. Is what it sounds like from the data. Like, again, we thought that immunity, or at least I thought that immunity was like for life, and now it turns out that it's only for like 9 months. Everyone was blindsided by inflation. Now that one is not. Yeah, no. We knew. I mean, us paying attention, we all knew, because at the beginning of the year, we were kind of saying, well, we need to start reducing rates here soon, but they're concerned about this summer wave thing that's happening, so they're going to hold off. And it turns out that really we should have tapered and started raising rates about 6 months, 9 months earlier than we did. And there's less chance of you transmitting it if you acquired it by natural means. I think that's true, but I would have to go back and read those studies to confirm that one. But that kind of brings us to the current situation, where we kind of have another choice to make that is difficult to make, I think. We might have a winter wave. Okay, Austria is not so hot right now, right? Now Austria is kind of like over politicized, so like over there, I don't know. But like Germany going into lockdown again, that's concerning to me. Okay, and given that Joe Biden and the Democrats are in charge, you know, I would not completely eliminate the possibility of lockdowns in the United States. I think it's a real possibility here. There are some areas of the country that are having a hard time with it. And there are not as many healthcare workers for reasons that, you know, we've talked about that before, right? So the hospital capacity is actually worse than it was, not better. So I think there's a good chance of some municipalities saying it's too much and trying to lock down. Okay. Now, that's not a for sure thing. That's very, very much what I'm saying is very, very speculative. We just know because of the winter, because of the weather, and because of the stats that we're seeing in places, even in places that are highly vaccinated, okay, a winter wave is a concern, okay? So we're now at the exact same situation that we were in last May, right? Where the economy seems to be going really, really well, but we're concerned about lockdowns again. Last time, we said, the Federal Reserve said, we aren't at full employment and we need to make sure that we continue to support the market. And so they didn't taper asset purchases. They pushed out interest rate increases. And then the summer wave, it came, and it was bad, but it wasn't a disaster. There was a little bit of a drop in some of the manufacturing things. Like, we made some money off of trading that in like August and stuff. It's actually kind of interesting to think back on, because at the time it seemed like, you know, pretty big divergences in those. And now it kind of seems like it was no big deal, right? Like we were overreacting. Okay, so now we come back into that same situation. Do we reduce the pace of the taper because of a strong winter wave? Right? We're in the same situation. It's the same choice. And I say that what is going on with inflation suggests that it's more than just supply chain problems, and furthermore, that there are very negative societal consequences to having extremely low rates for long periods of time, especially when the inflation is like really outrunning real rates. Okay, like real rates are negative right now. We can't afford to do that. We have to continue the pace of asset purchases. We should increase interest rates next summer, if not before that. And it might be harmful to the economy, but we don't have any choice. That's my opinion right now. What do you think? Eric K just says I'm not getting any more shots. I can tell you that much. Oh, geez. How can you go from a world without vaccines or magic COVID pills locked down and still destroyed to a world with vaccines and magic COVID pills still locking down and just, yeah, I think that anybody at this point that is like locking down, like Austria, I don't know what's going on over there, but I don't think that what they're doing is in line with the science or what would be optimal public policy. Okay, well, when I was talking about, do you go along with this trade? They did extend down quite a bit. So if you'd taken it, you probably could have made some money on it if you had taken profits, but it came back very, very quickly. So this just reinforces what we're saying, that the liquidity is okay. The liquidity is not good. Okay, let's say liquidity is suboptimal and volatility is high. And so we have to factor that into our trading. So on the kind of headlines that we're getting are not enough to give us a really good probable like trend day kind of a trade where you can just take it and hold it all day. Maybe if we're fast, we can try and make the small profit. You think the Fed will raise rates with the impending doom of other lockdowns? They really waltzed themselves into a dead end. Yeah, well, so I'm saying that I think that they should raise rates. I mean, not right now, but next summer, I think they should raise rates. It's really not raising rates, right? Because that's not a question until next summer, unless we get other like really bad data prints, right? Okay. But would the Federal Reserve reduce the pace of asset purchases because of the impending doom of further lockdowns? I don't think that they should, but would they? I'm going to say no. But let's say that that's extremely speculative because none of them have really said anything about it yet. Right? Maybe do we have some Fed speakers today? We do have some Fed speakers today, don't we? Waller and Clarida. But after the stream. And where are they talking? Due to speak about the economic... okay, so that one right there. So Waller, he's going to talk about that for sure. Due to speak about the economic outlook at an event hosted by the Center for Financial Stability in New York, audience questions expected. So he's there to talk about the outlook. Somebody in the audience is almost certain to ask that question if he doesn't talk about it before then. So that will probably be a really good one for us to pay attention to see what he says about, are we concerned about a winter wave? Should that change Federal Reserve policy, and see what they say? Or is he more erring on the side of supporting the economy amidst lockdowns or tackling inflation. I think at this point, though, they're starting to lean more towards, so we've got to do something about inflation. Wow, look at the way the E-mini opened up there was a little wild. Wow. I'm going to try and pick up a little bit from this. Probably shouldn't have done it that way. That's okay. I guess I'll just be stuck in this. That's probably going to stop out, though. Wow, lots of volume there. So if this stops out, I'm going to change my stop strategy. Okay. So I just want to make a teeny little one. Okay. Oops, I already missed it. Already missed my opportunity. Okay. Let's just do it with ones. No, this is just sim. My E-mini trades have been on sim lately because I've just been so terrible with it lately. Okay, I'll try one more there. Now I'm just going to kind of let it go off for a little bit. Hey, thank you. When 1 minute to market open. If you haven't hit the like button, please do so for the channel numbers. Oh, by the way, did my thing go? No, it didn't. My little sign in the background still doesn't start on its own for some reason. Okay, so those prices aren't so bad. Does kind of seem like my targets are a little bit out of reach at the moment, though. So kind of a risky thing that I'm doing. Pretty much degenerate gambling right now. Come on. So 96 has definitely got a lot of volume there, though. Come on. Treasury just feels like it's all over the place. Like, look, they're coming back to where they were. The treasury came back down there. I need to reset it. Well, the E-mini keeps pushing down. Like they just made slightly lower lows there. I do see a lot of volume pushing back against it, though. I think in the end, that we might get a pretty deep push down here, maybe deeper than I'm planning for. But in the end, I think that we're really likely to close close to 4,700 until inflation raises up to 10%. Well, I hope that it doesn't get that bad, but I was thinking about this morning with Joe Biden, because Joe Biden's numbers haven't been doing very well, and I was thinking about it, and I was like, the problem isn't just that Joe Biden is incompetent. Like that's part of the problem. But I think that the other half of the problem is that, like, Joe Biden is, nobody really thinks that Joe Biden is actually, like, in charge, Everybody thinks that he's just doing what the progressive left tells him to do. And the problem is that all of the policies that the progressive left have been pushing for in the past, in this first year, have been complete disasters, Okay. No, not quite filled there. Is Trump coming back in 2024? I'm not so sure these days. It sure sounds like from the rumor mill that he wants to run again. I personally don't think that it's a good idea. Like, just current polling is that something like 60% of Republicans would vote for him again, but then, like, literally everybody else says no. So that's like he could win the primary, but he would lose the election. That's current stats, right? I think that Donald Trump would be spending his time. His time would be better spent making a news platform, which they said they're going to do. Like, they got that SPAC. So I'm hoping that, the SPAC does the vote, and they start putting they release their platform, and they start putting things together, and he gets so involved with that he forgets being president. That's what I'm hoping happens. Well, the media is making some strides here on the upside, but it's not really going yet, right? Like, it's just there's been a little bit of a turn, but the buyers haven't, like, won, like, they haven't crossed the line yet. Biden forgot to be president already, says Gianna. Okay, that was, like, looking good, and then they got slammed back down there again. I'm kind of thinking about adding risk again, but I don't know, man. Like, after all of that work, I only gave myself down to 92. I'm not even below the low of the day, so maybe if this one at the open gets filled and then I can add back in down in here, I might do it. I mean, it looks like they're buying though. Kind of the issue is like, okay, once you get to 4,700, then what? Are they going to extend above 4,700, or is the Gamma just going to be like, no? I mean, we're still seeing buying overall so far. I would be concerned about this just turning into chop. And the treasuries made it back to 03. So now that ZN is back to 03, maybe we could try selling it again. I don't know about that one. What do you think? Should we sell it? I'm feeling a little bit lucky there. 1.54. Oh, he was being ironic. Okay, I didn't understand what Liz was saying. Okay. Balanced day? Maybe. See, I'm still not getting that fill. Okay, it sounds like that the Democrats were able to pass the Build Back Better bill in the House. I think it stands about zero chance of passing in the Senate. at least in its current form. You see, like, there was like nothing trading back into it on some of this hull that they had formed. I think if I was a betting man, go short Treasury 131.030 and hope that they're lower on Monday. Right now, that seems like very, very speculative, very, very risky. But on Monday, if I'm right, it's gonna be like, why the hell didn't you do it? There's really like 46.99. You see it there, and then it's like they can't quite get over it. It's just kind of and then nothing, you know. Here, we'll do it here on the 10-year. I'll put it on the risky sim account. Cool. I'll take one. That cooperated with us quite well. You think Tesla might rally because it's Friday? Oh, hey, I got filled in the ES. Okay, cool. Now you just let it ride. Let it ride. I see that you love to live life dating. I don't think I do. Like, it's something that's starting to come up in my mind now is like, Seth, you can take more risk than you have been. Seth, you don't sell your indicators only for a monthly subscription? Right now, I only have it as a monthly subscription. I haven't thought about that for a while. I was kind of thinking like maybe we should just sell it as a one-time thing. I thought that you guys would prefer a monthly subscription, that, you know, only paying $10 a month, it's $10, right? Would be like, oh, okay, I can use it for a month, and then if I decide that it's like no good, then I just don't pay the subscription anymore, right? And you know, if I was going to sell it for like $200, you'd have to use it for 2 years before you end up paying more. But you guys apparently don't think about it like that. I think that you think about it as like a monthly subscription is like taking on a monthly obligation, and you don't want to do that. So maybe it would be better for me to sell it for a certain price. Why long in ES? That's actually a good question. I don't remember. No. I think that the main thing that's driving me here is that I think that the gamma is stuck at 4,700. He says that your name was. We didn't drag your name through the mud per se. No, okay. So your point was, if you want to convince me X is a thing, my only evidence I will accept is forward testing. I've always rejected the nebulous and ephemeral back testing. Okay, so here's what I would say about that. It's not worth forward testing if you haven't back tested it first. Yeah. You're true, Ace. You have never made any claims. This is that's kind of my whole point, though, Ace. Like, this is why I'm like so frustrated about it, because I still love you very much. You come over, we just hang out. It bothers me that I haven't met you in person. Like, it really bothers me. But the thing that I'm frustrated about is that I'm trying to like go through like a rational approach to trading, right? And I think that part of the rational approach is find something with empirical evidence that it's like a real behavior, like a real persistent behavior in the market. Write up a strategy to take advantage of it, back test it. If it passes that, then you move on to the next step of forward testing it on sim. You do this and that and the other sort of a thing. And I feel like that I'm having a really hard time convincing people to do that. You know what I mean? And it's not your fault per se, but sometimes when I'm having the conversations with you, I feel like it's not helping me towards directing people towards that goal. You know what I mean? So the question that we got to ask is how do we make a rational approach to trading more sorry, what is the word that I'm looking for? It's really hard to think when the news squawk is talking in my ear about shit that doesn't matter. Your definition of rational in regards to trading is different from mine. If you're watching this 20 years, I want you to know that all I've ever tried to do is help your dad make money so you could have nice things in the baby gap. Okay, so like here's the thing. The question is, how do we make a rational approach to trading more appealing to people? And the problem that I have is that I feel like that often when we're talking, that does not make it more appealing. But more to the point, I don't think that I have even convinced you on a rational approach to trading. I feel like that when I go through and I'm like, here would be like a rational approach to it, that you're not interested in it. That you're bringing up something that's kind of like the opposite. Do you hear what I'm saying, Ace? Have your moral custard so much that you have to relieve me instead of okay. I'm not quite sure what you mean there, but maybe I was unfair to you. I don't know. I don't even remember what I was saying, to be honest. I was just really frustrated about the last even I mean the trading has been fine. It's not that. It's just the world. The world. So you're saying you haven't made any earnings from trading? I mean, here's the thing, Ace. It's one thing to never make any claims, but it's another thing if like people are making assumptions about how you're doing and you just don't correct them. You know what I mean? Trading is working on yourself. People are lazy. Look at their routines. They're rather even save for someone rather than start changing something in their lives. Well, I mean, maybe it's not Ace's fault. I kind of thought that he was doing okay. But that's kind of the other thing is that it seems to me like the way that Ace trades, that there's some things about it that are really worthy of investigation, like really worthy of investigation, and saying, where does this come from? You know, how effective is it? Like, what are the statistical properties of it that we haven't been able to do, right? Because it's probably the case that there are some really positive things about it, but that's probably not appropriate for everybody. You know what I mean? Because there's some risk to it. It seems like your self-control is a big part of it. Like it seems to me, Ace, you tell me if I'm wrong. It seems to me that you have better self-control when you're trading than I do. Because I'll go off the rails on E-mini sometimes and lose like 5 times in a row, and I've never seen you do that. Why was that part of it? Because they were asking about it. Like it was just the same conversation that we have every day, Ace, right? Well, you can make money from taking on risk. There's some real disadvantages to that, and it might not be appropriate for everybody, and it might not always work out for you in the long run. You know? I mean, if we look at a 2-year history of Ace's trades, and we say we're not 100% happy with them, then we should fix that, right? Because if anybody has the ability, that's the other thing that frustrates me, Ace, is that if anybody has the ability to take the things that I've learned and am sharing with you guys and really make a ton of money from it, it's you. Like, I think that if we get really good at this strategy and we have the funding and we practice self-control, that we kind of have a system that you can make millions from. That's what I'm thinking. The fool isn't the one saying they're the trading messiah. It's the fool is the one that's believing it. Yeah, but Ace never said he's the trading messiah. Sometimes we treat him like that, though, right? It's like we kind of go through this cycle where it's like, wow, Ace, you're doing like really, really good, and giving them the praise, but then it's like, no, but I'm not actually the messiah. You don't have 12-month statement, Susie? No, he's never made any claims about being trading anything. But Ace, why don't you just give us a claim and then we know? There's no fault, right? I mean, here's the other thing. That, like, we have to be fair on the other side, on the rational approach to trading, right? Because the paradox, or remember, the paradox of rationality, we're talking about, I think that there's maybe people talk about it in different contexts, because one group of people I'm hearing saying the paradox of rationality is that people don't like the rational approach, right? But the game theory paradox of rationality is that in a game there are often, it's quite common that people acting irrationally will give them an advantage. That you go and you say, here is the most, like the prisoner's dilemma, okay? The prisoner's dilemma is there are two criminals, and if both of them stay silent, then they'll go free. But if one of them rats out the other one, they'll make money or something out of it, right? And so the rational thing is for neither criminal to say anything and they both go free. But what will always happen is one of them will do the irrational thing and screw the other one over. And the person that does the irrational thing gets benefits from it, and the other guy gets punished, right? So it's always going to be the case that we could come in and we could do trading a certain way and be doing something just completely irresponsible and make money from it, right? Now, the split side of that is that it is very possible, if not extremely likely, that you could be trading and doing very, very well and doing absolutely everything the way that you should and lose money. Because, that's just kind of the nature of trading and stuff. Right? So we have to be fair that even if Ace came out and said, oh, well, okay, I've only made like $10 over the past 2 years or from trading or whatever it was, that wouldn't mean that his approach is invalid, right? Why is it anybody's business? Well, it's not our business. I just think that it would be useful. I think it would be beneficial to the room, don't you think? NASDAQ Trader says that's where backtesting comes. Oh, well, I mean, that's where backtesting can be really useful, right? Because with a backtest, I can go and backtest like 5 years worth of a strategy. And that really gives me a lot of information about how that strategy tends to perform, right? Then once we have that and we're happy with how that performs, then we can go and we can start forward testing it, right? And then of course at that point we're really not, like, you really haven't like truly proven like this is to prove it's a profitable strategy until we've been doing that and we have like 2 years worth of data. And then I could go on the internet or a forum and I could say X person has a system that I can confirm is profitable over 2 years, right? That's true, but I felt like you were saying like you have some empirical evidence about this is the way that the market behaves, and I don't care unless somebody can show me the statements, right? That's kind of the thing, is we're kind of getting into information that other retail traders don't know. They don't talk about. When I talk to people on Reddit about this stuff, like I share it, I feel like it goes over their head because I never hear them. They never like respond. You know what I mean? They're never like, oh, and then you get into this big discussion about what it means and all of the. No, it's never that. It's just like they respond. They're like, oh, okay, maybe I understand what you're saying. I'm not sure. It's just like. Which trade did I place? The one in the E-mini? Wasn't bad. It was better than I thought when I took it, wasn't it? But it did go 17 ticks against me. I'm kind of wondering here, what if I just really increased my size? Because like I'm there in the E-mini on like, you know, with a stop that should work given the rotations that we see in the E-mini, but maybe I really just have to take it at a higher level. Maybe there's just so much noise. What if I did 32 tick stop instead of 16 tick stop? Would I maybe be a lot better? Uzi, is you're actually right, Uzi. I've done the effing opposite in this room, pretty open about my ass whoopings. It's true. I'm always the one that notices, based on what I know about your strategy. I'm always the one that's like, oh wow, Uzi must be doing really well right now. But whenever he actually brings it up, it's because he got absolutely pantsed. And I do remember there, like during COVID in particular, like the beginning part of COVID, that he took a beating for sure. There was like a 1 month there where it was just like, oh my gosh. Well, here's where I think he's coming from, Ace. I think that we all think that you're a billionaire, and that if you shared us your one secret, that we would all be billionaires too. That's do you get what I'm saying? Like, maybe it's not your fault. Maybe it's my fault that we all think that. But right, you being here wants to tempt us all into not taking the rational approach, because I come in and like my whole thing is, okay, don't look at how other people trade. Don't try and say here's somebody that's been successful and I'm going to go and duplicate their thing. I'm saying go do your own principal work, find information about the market that you can find structural inefficiencies, learn how the market works, and then factor that into your trading and do all of the homework about how that tends to perform in the past. Understand more advanced statistics so that it's more than just about like what your stop target and win rate are. Like, understand the longer run statistics, like the fat tails about it are, and things like that, right? And that's how you take your approach to trading, and understand that it's always going to be hard, and that you're going to have to be persistent, and that you're going to find things that are going to stop working, and you're always going to have to keep working and getting better because the market's always getting better, right? That's like this approach that we want to take. But even I remember we had a period where I just took your signal and I just followed your signal. I had some success with it for a while, but then I blew up with it, which was largely the market and how I responded to it. But right, so from that perspective, Ace, if we have that problem, how do we deal with that problem? How do we get people to the rational approach? And if we don't like the rational approach, because I am getting the impression that you don't like the rational approach, that you don't want to take the rational approach. I guess we have to get past that first. So do we have a problem with the rational approach? I think one of you guys said your definition of rational and Seth's definition of rational are different. Don't Ace, I wouldn't take Eric Cage's too seriously. He is trolling you just a little bit. No, I think you're right, Uzi. I that's the thing is if Ace gave me so here's the thing, like, how much data do you need? Because of COVID, the COVID market is so different that you kind of need data from before COVID. So that's why I'm like 2 years, 3 years, because I'm worried that the COVID market is about to end, right? Because of inflation, the COVID market might be ending. But if we went through and we looked at 3 years and there wasn't some profit, and maybe a lot of it is when you factor in like the exchange data fees and all of that, maybe it's close to break even. But if it was negative, I would be quite surprised. I would be quite surprised. So and that's just from me reading, following everything that he's said in here for years, because I mean, we've been friends for years now, right? I'd be quite surprised. And he hasn't been making any claims, but would you be willing to at least say that if over the past 3 years that your net is positive? We're all in here making calls. Yeah, I don't know. I'm gonna wait and see if Ace answers that question first. But I'm kind of sitting here thinking like we need to change some things. Yeah. But my question was, if we looked at your trading over the last 3 years, is it net positive? Once you factor in like all of the exchange fees and all that. He doesn't. You don't want to tell us, so then okay. I'll accept that as an answer. It doesn't help us, but that's your prerogative. I'm not gonna, because you're right on that point, and maybe your privacy is more important. Like, you're not making any claims. We drug you into this. You have no obligation to show us. If this was in Discord and you were talking shit, then I would be like, statements are banned, right? But for you, that's fair. I'm going to assume that means no, but but so since you got to go, Ace, here's what I would like you to do. I feel like we need to change some things about how we run this stream, don't you think? I feel like we need to change something. You think about it. I would like to know what you think too, Uzi. Like, what can we change? What should we change? Because, like when I say here, like, oh, we're all making calls and maybe it works or it's not. Okay. We'll see you later. I feel like we could be more serious sometimes, yeah. Like, I've done a lot of work. I've done a lot of research. I've learned a lot of things. I'm trying I'm trying to get some of that out into some of the videos, but it's really hard because it's really advanced material, you know? But I don't feel like that I'm doing a very good job of like translating that over to you guys in ways that you can use. I don't think that I'm doing a very good job of selling it. I don't think that I'm doing a very good job of being able to take any of the information that you guys might have that is really actually truly useful and incorporating it. We must always assume everyone is unprofitable until they show us broke. Oh, I mean, fair enough, right? But if we're going to take that position, if we're going to take that position, we also have to say that just because somebody hasn't made money doesn't mean that there's not some that there's not something to their strategy. That there's not something that you can learn from it, right? Okay, Quasar says, do you know any way to get the depth at least the best ask historically and compare that with the actual filling rates? I have not been able to get the depth data so far. Okay, so kind of yes. So first of all, that's historical bid ask data, and both CQG and Rhythmic will provide it, and that is how NinjaTrader's tick replay works. Is they go and they look at the historical bid ask prices, and they look at the historical volume, and they use that to determine, was an item a buy or a sell. Now that information is not like how much was on the bid and how much was on the offer. So the typical way that you deal with that is if price ticked through that price and there was volume at the next price, then for sure that you were filled, right? So there's only going to be maybe 30% of times where volume went into a price and then it didn't tick through, and you don't know if you would have gotten filled or not. And so for backtesting purposes, most of the time, that's sufficient enough to get you the information that you want to get from backtesting before you decide to start forward testing it. And that's about the best you can get, unless you start like saving all of the level 2 information yourself, but that like requires a lot of storage. But when we make the speculator Seth hedge fund, then we'll save that data for you guys so that you can test it. Uzi says, did I miss the part where we stopped talking about philosophy? Apparently it is about who is a profitable trader. I don't know, man. I mean, that was the thing, was that I think it was Lucas that was asking about it, right? And I was saying, well, I haven't seen like all of his trade information, so I can't tell you how he actually performs. Yeah. We've certainly seen him catch some good runners in the past, though. So I know, right? What happened on Wednesday? Like the problem is that hold on, the news squawk is talking. Wanted to compare the depth with the fills in order to avoid swipes. I might start to record that then. It's crazy that no feed. Well, yeah, but you gotta realize, like, you realize how much data, like how much space it requires to save all that information. I don't think that it was that serious, Uzi, but I don't know. Like the issue that I have here in this particular situation is that, like, number one, like there's a larger issue that I'm dealing with. And I don't know if that issue is all in my head or if it's real. You know what I mean? So I said some things to Ace, trying to sort that out, and he didn't respond very well to it. And the problem is that we've seen from him. I'm kind of anxious, and he seems like he's a little bit avoidant. Like, if you want to play that, then he's just going to disappear on you. And, so from my perspective, it's kind of like, that's not really a very good match, is it? Like if Ace and I were dating, I would go and I would say, nah, his attachment style isn't compatible with me. Right. So, but that still leaves us at this point at which it's like, I feel like there's a problem, but I don't know if it's all in my head. But the problem that I have, again, if I can state it, is I think that we've done really well the past few months. I think that we've learned a lot of really critical things. And I think that we have a lot of information that we can share with the retail world. And I want to both expand upon that knowledge and take it even more in depth. And I want to be able to run the room in a more serious manner using that kind of information, which means having a rational approach to trading. And so I went and I created a bunch of videos that were like, what is that rational approach? How do you create a strategy from start to finish? And I don't think that Ace watched those videos, but then whenever I talk about those things, I get pushback from him. And so I'm like, what do I do? Is there a problem with that approach? And he's not able to really explain very well, or I'm too stubborn to see it, or are we all just inventing things in our minds? I don't know. And the other problem that I'm having is that a lot of what Eric Cages is saying right now is like resonating with me. He clearly has something to hide. The first day that he came in here, I'm like, we were talking about statements and he showed me his statement. And now it's really weird to me that he's like, I wouldn't show us that. I don't know. The funny thing is that if he gave us the broker statements, it wouldn't really be what we want anyways, because what we really want to be able to do is look at his stats for the last 2 or 3 years, right? So really what we would need is like the Ninja Trader stats. Yeah, there you go. Uzi, I'm a nose above water trader, a really good portfolio manager, and most of my household income comes from something that isn't trading at all. No, we're not talking about Paul Rotter. Oh man, you know what? Okay, so we should move on to that because we've got like 45 minutes, so I want to see what you guys think about this. So Paul Rotter was famous for spoofing, really. And I'm kind of looking back on it and I'm like, you know what? If he couldn't spoof, I don't know if he'd make money. Is that I mean, that's speculative, but I think that's kind of a fair speculation, wouldn't you say? But no, so I have this article about big orders, and I wanted to know, because last time, Lucas probably still isn't here. He'd probably be the best one to ask these sorts of questions, but because he was kind of like, yeah, well, you don't want to just always take the edge and then you're going to make money. It doesn't work like that. And maybe I didn't highlight that one very well. But in the big orders, that is exactly my thought, Seth. There's that rule on Eurex now to avoid a new router. Yeah. Mm-hmm. Okay, so here's my thoughts on big orders. So first of all, it doesn't happen as often anymore, right? Then the big thing is that big orders are really there to try and coerce you into trading. So just don't trade. When you see that and they're trying to make something happen, you don't have to trade on it. And in a lot of situations, that is really what you should do. But I wanted to give you people more than just that. Then when you see a big order, don't trade, because obviously it's more complicated than that. So a couple of things that I went in I said, you want to see if you can try and understand why it's there, if you can understand the intentions behind it, and sometimes you can use the context around it, right? So some of the contexts that I'm going to be pointing out is, well, first of all, know what the news is. If you have a bias towards what direction we should be going because of news, that can really help you interpret large orders, right? But then the next thing was how far into the session we are. So if it's late in the session, I'm going to ignore it, because could be just a trader that wants to go to lunch and he's trying to get fills. And so that's why he's putting a big order out there. If it's at the beginning of a session, I'm going to be more interested, but that doesn't necessarily mean that I want to take a trade or to follow the big order. It just means that I want to prepare myself for a move, because if it's like right at the beginning, like especially if it's like a no news Tuesday in the treasuries before the S&P 500 opens, they might be stirring the pot because they're going to make a big move that day, right? That's my stop, by the way. Then I also talk about the big battle setup. So like sometimes you'll see volume go back and forth, and then like one side wins and they'll place a big order up so that everybody can see that they're the one that won, Then we did that one. And then I talk about in more active markets. If it's an active market and there's a lot of volatility or the liquidity is low, then a large order being placed on the DOM is going to have more of an impact. And it's probably going to go the way. Like if it's a big bid, then it's probably going to move price up. And if it's a big offer, it's going to move price down. Just because it's larger and the liquidity is less, so it has more impact. And if everything kind of comes together, then you can take a better trade. So I'm wondering, with all of that, and I hope that I went through all that you could hear that. Do you guys have any questions or concerns with that? Because if there are, I would prefer to address those in the video itself. Now, I'm also another question along with that. NASDAQ Trader says he has many, many problems with that. Let's see here. Sometimes there is no edge. There is just drive. Okay. I don't know. I do think you're maybe a little bit... We should move on now, Air Cages. Oh, wait, there's another important component to how you used to trade some years ago is you get a rebate on commissions if you're scratching. Yeah. I would love that today too. I think you'd be interested in reading the white papers of quantitative brokers about, can you link me to that? I think I might already kind of know what you're talking about, but... because that's what we're talking about with liquidity holes, that you can actually model the latent liquidity. And when you start to model the latent liquidity, it reveals why we get the square root law of meta order impact, for instance. How can I use spoofing to my advantage without being a whale? Well, I think that the most simple example is if you get everything to come together, you're in an active market, you understand why the market is moving, and you understand that the whole, why the market is moving the way it is as it regards to the liquidity, because the liquidity is light or whatever. And you see a large spoof and you're fast and you can front run those and it can move the market and you can make money off of those. Yeah. Wait, what are you saying, Uzi? I mean, on the whole subject, I get it. I really do. I just try not to get into that about myself, but I got to give my man a head start. I don't know. You can't back. You're right. That's a good point, NASDAQ Trader. And that's kind of my concern with this video is that what I'm talking about is not really something that you can test empirically. It's really more of my experience on this particular subject. So, because the real empirical thing that like I know I can say to you with confidence is that it's probably to your advantage when you see large orders to just not trade it, because they're trying to coerce you into doing it if you really know it's a spoof. Well, not even if you really know if it's a spoof. I mean, if it shows up out of nowhere and there's really no sensible reason for it to show up, I think that the correct thing to do is to stay out, to stay away from those big orders, because he wants you to fill them. He wants you to try and trade on it. Yeah, on the ace claims things, I kind of feel like he is, I don't know what to say. For him to all of a sudden take the position of like, no, I don't want to tell you, is kind of weird to me. Well, we're going to talk about him here, Cages. He's probably he's probably my best friend, and I'm hoping that he comes back. But he has kind of bailed when was challenged this time. I find it curious, because like the thing is, and like the split, like the thing that really rubs me the wrong way about it is that it's like, okay, if you're not making money from it, let's work on that, because I think that he has had some success in the past. I've seen it, and I think that there's a few things about the way that he works that I think are hard to come by, and gives him a really good chance of being able to implement some of this other stuff that we have, you know? He's certainly listening. I think that he just had to go and take the kids to the bus. It's like 8:20 is around the time that the kids go to school. The elementary schools start. At what point is a spoof no longer... okay. Good question, actually. If it gets filled, then you know for sure it wasn't a spoof, right? If they come in and they hit it, like a couple of orders hit into it and the order doesn't pull, then you know it's for real. We got his number. It's fine. Quasars, I can't see links if you posted a link there. You would have to put spaces around the periods or remove the periods, or send it to me on Discord. Yeah. You think that he likely falls under the SFP Artesian? Really? But you know, Window, that's kind of the thing that like confuses me, because it seems to me like he talks rational, like particularly as it pertains to faith related questions. He wants to, he takes that, you know, people shouldn't say things that are wrong and that are harmful, and how do you prove whether something is harmful or not harmful? But then when it comes to trading, and I try to say, let's use reason and logic to determine how we trade, I get pushback, and I don't understand it. That's not bad, Uzi. You showed me a picture of his trades they took today. Oh, but you did quite a bit of them, though. But that one was good. That one was good. That one was good. That first one that you took was kind of a little sketch, but that one was break even. Yeah. But those all look great. Like you probably, well, like if normally I would be like, that looks like over trading, but it looks like you made money on like practically every single one of them. Good job. That's what, 1, 2, 1, 2, 3, 4 winners and a scratch. Wow. Well, so NASDAQ trader, that's why the video is about large orders and spoofs, right? Because you might react to a large order too, right? Because the whole thing is that like the larger picture that you kind of have to have in your mind is lots of offers has a tendency to move price down. Lots of bids have a tendency to move price up. Just like market orders, market buys have a tendency to move things up. Market sells have a tendency to move things down. Offers pulling have a tendency to move things up, and bids pulling have a tendency to move things down. So you see a large order on there. The tendency of the market overall and the way that the robots read it and everything is that order at 131.06 half will have the tendency to move the market down. Okay. Now there's another thing. I guess maybe I should mention this, but sometimes markets have like to go for those spots because that's where liquidity is at. Okay. But in this situation, I have to say that because there's a big order there, that, we're less likely to extend beyond that 06 half. I mean, the momentum right now is up. So let's say the momentum is up. We're more likely to turn somewhere around 06 half than we otherwise would be because there is a large order there, right? So if that order is fake, if we get up there and only 2,000 trade there, then it was a spoof. And then what ends up having the real final impact is the order pulling, and then it pushes us up, right? So being able to know whether that one is a spoof or not is kind of matters, right? So how do you sort that out? And that's what I'm trying to do in that video. In this particular instance, that large order is just above the high. So you should expect to see a certain amount there just above the high anyways. So you can kind of discount it in this particular instance because of that, right? Oh, did it just move? Did it just move? The fuck? He's listening to me and he's like, okay, Seth, what do you think about this one then? I'm going to move my order down to 05 half. So now we really have to be thinking about. That's funny. We have an instance here. So let's think about our framework. Are we in fast action right now? Well, we have low liquidity, but there's not an unusual amount of activity in the treasury at this very moment. Yep, it's a 2000 MBO that stepped down. Okay, so we don't have significant stuff at the moment. Also, it's a Friday. There was no news today. We're fairly late into the session. So I'm thinking that is probably somebody that genuinely wants to be filled. But that I don't, so that's one that I wouldn't trade on. I wouldn't trade on because it's late into the session. Like he probably gets filled and maybe he does get filled, but it's not worth you trying to do something off of it, right? That did that work? Do you understand why I say you probably would want to not take a trade on it? If I trade on Sim, can I trust that my fills will be similar to the live environment? Depends on the platform 100%. Okay. If you are trading on Jigsaw, the Jigsaw simulator is head and shoulders above every other simulator that I've seen, without question. The Jigsaw fills are actually more stingy than real life is. So if you're getting fills on Sim, you're probably going to get the fills in live because it's more stingy. The thing though that the simulator can't simulate is that the market does react to your trades. And there's just the human element too. He moved back up. He must be listening. He's like, okay, Seth, let's see how you react to this. Well, it's 8:30. It's a Friday. Why do you want to trade at 8:30 on a Friday? That's probably somebody trying to do something. Now, is he trying to push the market down, or is that order an order that really wants to get filled? I don't necessarily know. All I know is that he's trying to do something late in the session to try and make something happen. So you wouldn't want to trade off of that one because it's late in the session. Oh, you want to see the trades that Uzi took? Here, I'll show you. Oh, it's like zoomed in for some reason. Can I zoom out? Okay, so we took one like way earlier here, before that big move down. But he scratched that one. You can't see the arrow, but he scratched that one. But then he took one at 161.14 to 18, so he made 4 ticks on that one. And then he took another one from 19 to 21. He made 2 ticks on that one, so he's 6, 7, 8, 9. And then he took another one, 10, 11. So he made 11 ticks today. Good job. Okay, so first of all, I didn't say to join them. I say you can join them, and if you want to sell, there can be an advantage to joining them. But only if you were already going to sell. Okay, there's like only a slight possibility that it doesn't go through, but it's just because of the opportunity there. It's a spot where it's like you can get filled, but it's going to take a lot of volume to get through you. So that can be advantageous if you're already going to sell, okay? I tried to make that clear in the video. I don't know how I can make that more clear because I'm already noticing people saying that. But then how do you identify aren't they hidden? So that's a really good point too that I probably should have covered. So first thing is that you're going to know it's an iceberg because you already saw a little bit go into it. You know what I mean? So like, there's going to be a situation where you saw some volume go into it and like 2,000 lots traded and it didn't clear. And the offer was, like in this situation, there's only 500 on at 04.5. And so if I started to see 500 go into it and it was still the same, like there actually might be a good possibility that there is an iceberg at 04.5 right now, but it's still really early on. Okay. But say I have that 1,500, 2,000 go into it and it hasn't cleared. Now at that point, I know that there's an iceberg there. Then you kind of have to start to ask yourself, like, how much is it going to be? And generally speaking, they'll be of a certain size. And so you'll be able to guess how much it is. Have you ever seen when we're sitting here and I'm like, is this going to be a 15K iceberg? Just because I know it's like, this is how much it's gone and this is how much it's gone, right? But there are also some places where you can kind of anticipate that they're going to be there. So I don't know how I do that, but sometimes I just kind of know. They tend to be a little bit on the edge. Like if we had a big move up and there was exhaustion and we're coming back down, you'll often see those icebergs on the offer as they come back down. It's like they're pushing it down and they're kind of trying to be sneaky about it. Oh, not 11 ticks, only 7. That trade in there at the second green line was a short that got stopped out for 2. Oh, really? Are you saying that one was a short? Oh, I see. That one was a short that got stopped out for 2. Okay. I see. Market orders hitting the limit orders, but not lifting it even with size. Yes. And again, here's the real key. Like if it's an exchange side iceberg, the offer will not change. Like if it was like 1,000 on there and then 500 hit into it and now there's only 500 on the offer, That's not an iceberg. That's just not enough volume hit it to clear it yet, right? But if I see 500 on the offer and 1,000 traded into it and it didn't tick up, there's an iceberg there. Not a perfect day, just a well-managed one. Well, I think for you, Uzi, buying the dip there was a bit of a gutsy call, but it was a good call. I mean, based on what we knew about the liquidity and everything, I think it was a very savvy trade. One that if I had been feeling a little bit better about today, maybe I might have tried myself. So, I think it was a good call. How do you distinguish between stops and icebergs? Well, I mean, often the volume that hits into an iceberg is from volume stops. Like you'll see, this is what they do, dude, is they put an iceberg there at 04, but they say only show like 200 of it. And so you'll only see 500 on the offer, but there's actually like a 5,000 lot iceberg. So then there are all these people, such as myself, that have stop volume orders set that if it gets below 500 lots to hit into it. So they pull it and they pull it so that all of those lots get triggered and then they all hit into the iceberg. Because you got to think about it. Like if somebody's getting filled there on the iceberg, and why would anybody hit into them? Like why, if they know that there's this big guy that wants to get filled and everything? I mean, maybe they have reasons to buy and they're happy to take it. But I really think that a lot of it is they kind of set something up to where they know that a certain number of robots are going to hit into it. Because something that you'll also see, and this is again where I actually think that you can really work things out around icebergs, is you'll see a bunch of buying. Like say there was the iceberg at 04, they'll pull it and you'll see a bunch of buying into there, and those are all robots trying to catch the edge. And then they'll be like, oh, it didn't tick up. I need to get out now and take the loss. And so then you'll see some volume go into 03 half. So there can even be some situations where you can just take the one tick there really quick because you kind of could anticipate the iceberg and knew that it was there and the robots couldn't. I've done that before. I wouldn't base my trading career off of that, but it can happen. You can tell I was betting on a trend down day, got proven wrong, so I flipped. Oh, okay. I'm a little surprised that they've been able to, because you saw I was betting on a down day, right? I was betting like they came back up and now probably they're going to turn back down. Maybe they do, but I was surprised that they were able to get back up to, what was it, like 05, 162 even in the ZB. I was a little surprised by that. Bring me the biggest iceberg on the planet I can show you. Well, okay, so another thing that you need to, I'm not quite sure what you're trying to say, but there are exchange side iceberg orders and there's synthetic iceberg orders, right? If it's a synthetic iceberg, you might see some orders tick through and tick into the next price before it has a chance to add more on. But if it's an exchange side iceberg, it's like the limit, the offer like just doesn't even change. It refreshes it and it doesn't even send you the update. It just says there's 500 there. That's why I'm saying, like, the real telltale sign is a bunch of volume going into it and the offer doesn't change. Or the offer even increases. The iceberg itself does nothing. Yeah, but here is again where I don't know why. Oh, what do I continually feel like I'm not a very good communicator, right? show you a video that runs through a huge real iceberg on one contract? Well, the guy on the iceberg generally wants to be filled, right? Are they going to come back down? Oh, Waller is talking. That's what's going on there. I don't want to take a trade like 15 minutes before I'm going to quit, but I think that you buy rates right there. Yeah. It sounds like he was saying when the time comes to begin reducing the balance sheet, I would support a process similar to last time. He's totally 100%. We're going to reduce the balance sheet. So far, I mean, there could be more. We should be cautious, but I think that it makes sense buying rates here. Like if they give you one spot 5.4, I think, yeah, take it. As long as he got filled, why would he want to keep pushing price? Well, they reducing the balance sheet, not stopping it. That's what being hawkish is today. Yeah. Well, the reason why I think it's hawkish is because right now he's saying like we need to be concerned about inflation and we need to position ourselves to be able to deal with it. And in order to do that, we need to reduce the balance sheet. And so that's what we're going to do. That's what he's saying right now. And he's not saying, well, I'm really concerned about COVID, so maybe we adjust it. Like that's what they're looking for him to maybe say. That's what the doves would be looking for him to say is we're really concerned about a winter thing. Okay, so to NASDAQ traders, as long as he got filled, why would he want to keep pushing price? So you gotta understand that these guys are doing like bigger operations, right? Like this guy, is he really just want to put an iceberg there to fill 5,000 contracts and then that's it? So if it's a large meta order, this guy probably wants to fill like 60,000 contracts. And the whole trick here is, how do you get 60,000 contracts filled without the market catching on, right? So, but then after you get your 60,000 contracts filled, you want it to go your direction once you're in the trade, right? So kind of what you do is you'll just like what Quasars was saying, you'll put in an iceberg to sell a little bit and get filled, and then you'll turn around and you'll take the edge on the other side. So now you've gotten filled at 0.2 half, you took the edge at 0.2, and there's going to be all these people that filled you that are puking at 0.1 half, right? And that kind of gives you a better chance of it starting to go your way, right? And they intentionally will do that. Like they will intentionally cancel the orders that they have on the bid and then buy out or sell out the rest of them to push price and to start getting things going. And what they will do is they will kind of hold their limit orders in the area that they have, get all of their fills in the area that they have. And then once everybody on the team is filled, then they'll start taking the edge and they'll start moving price. And you'll see it happen. It'll go click and then click again. And it'll do it like 2 or 3 prices all at once. There's no correlation. There's no reason it should be happening. That's when you know that you've been had and that they were absorbing contracts there and are ready to move it. But if you have a video that runs through a huge real iceberg on one contract, that's it. That doesn't make any sense. If it was one contract, it wasn't an iceberg. Like I don't get what he's saying. I don't know about the Powell thing. I guess we're going to find out this weekend, but it happening this weekend kind of makes me think that the market might not, I don't know. Does that mean that it's going to be Baynard because it happened over the week? It happens on the weekend? I don't know. I think there's a much higher possibility of it being Brainerd than the market is factoring in right now. Update on golds. They've had a little bit of downside action, but they're holding okay today for oil, for gold. We'll have to see what they do next week. We're really in a weird spot in the markets because of options expiration, a combination of options expiration and then Thanksgiving the next week after that. The markets are going to be a little weird here. And then on top of that, we got all sorts of significant breaking news on the Friday too. See, I would be doing okay if I had taken a 1 spot 5-4. Prosecutors reject plea deal for defendant in Ahmaud Arbery murder trial. Okay. You think they'll do the traditional TC dump on a Friday? I kind of am wondering. Because the whole thing is like, they said maybe in the next 4 days, that would be on the weekend. Why the weekend? You know, unless he hadn't made a decision yet. I don't know. Timing is all wrong, but that was a good trade right there. I don't think that they'd given me 1 spot 5-4. I would have had to hit into it with a market order like 1 spot 5-4-2. So far, it's going okay. It looks like that there could be more momentum. While there's still speaking, that could change very quickly, right? I can't really say about short-term on gold. The issue with gold is that anytime that real interest rates increase, it's going to hammer gold. Okay. But inflation supports gold. And so you'll see it will come down on real interest rates, but then gold will ultimately go higher. So I think that on like a mid to long-term trade, I feel like you almost have to have gold in your portfolio right now, because if the inflation really does end up being a problem, gold is being in gold or being short treasuries are going to be like the only safe havens. You know, and like you really got to wonder with the treasuries of the liquidity and everything like that. That's just a little zany, but you're selling over in the treasuries, so it's different, right? But in terms of like assets that you can buy, if inflation is really a problem, then all of these equity markets are going to get creamed because of the rising interest rates, right? Bitcoin. It seems to me that Bitcoin is not a safe haven because it is more correlated to the S&P 500. That's what we've seen so far, at least. So, gold really is like your only good hedge, but it's going to be a choppy trade. Right? It's going to be every time those interest rates rise, it's going to get hammered, and then somehow magically it's able to get above that and go higher because of the inflation. That's what we should expect to see from the data. There was a Chicago Fed study on this, where they said that rising interest rates is like a really big factor, and it really has a significant impact on the short term. But the effect of hedging against inflation is quantitatively larger. Yeah, but I would still say I feel like you almost have to have gold. Maybe that's going to end up being like a really bad prediction, but I have some silver in my portfolio. I feel like that you absolutely have to have some of it in there. Bitcoin is my safe haven. Is that like your only haven, right? So let's talk about Bitcoin for a second, shall we? Because they're in an interesting spot right now. I thought it was a little bit curious the way that Bitcoin really went sideways for a long time and then started failing 60,000. And that's right about where a 50-day moving average is too, which again, those don't necessarily matter per se, but the Bitcoin guys really care about that sort of a thing. So below the 50-day moving average, you probably want to see a bounce, but much below that, and those guys will really start to lose some of their enthusiasm, right? But we're also at the options, and this is around the time of month, like when was it in October? It's always the third Friday, right? So the 15th, October 15th. Actually didn't really do it in October. Maybe September the 17th. A little bit in Ethereum. Anyways, because of options expiration, we've seen equity markets have problems around options expiration. It doesn't surprise me to see this around options expiration in Bitcoin. Okay. So this move down in and of itself isn't such a big deal. And then what do we got coming up? Then we've got the holiday. Okay. And that's a really important one for Bitcoin, because people will take profits ahead of Black Friday so that they can buy gifts. They want to, because this is all like risk capital for them. They made money. They're going to take some of it out and buy things. Okay. That happens at the end of the year in Bitcoin. Every time around November, there tends to be some selling. Okay. And around the end of the year, they tend to go around down the end of the year and the beginning of the year. And then by March, they've recovered. Okay. That's the cycle that happens in Bitcoin. And it's seasonal for a reason, because of people's spending habits and stuff. Okay. So we're having selling going into November, and then supposedly sometime before the end of the month, we're supposed to get information about how much Bitcoin Mt. Gox is going to sell, and it could be a lot, and that could be a really big problem for Bitcoin as well. Okay. But if we get beyond that and we're into the first week in December and Bitcoin is able to recover 60K and push up, then things are probably looking really good for Bitcoin. But if they don't, then they're at real risk of we've seen the top, which would be kind of weird, because that would mean that this time we had a top that was not accompanied with a true crescendo top. You know what I mean? Yeah, then we have Chinese New Year. Yeah, although given that China has really been trying to get rid of Bitcoin in their country, like they got rid of all the miners and all of that, the Chinese New Year should probably not be as big of a factor going forward. It will probably still be somewhat of a factor, but I would say it's probably not going to be as big of a factor as last year, huh? Mm-hmm. 3 minutes to wrap up. Yeah. Well, the wrap up is, hey, think about it over the weekend. Are there things about the way that we run the stream that we should change so that we can do this? Because like the questions that you guys are asking me right now, these are the kinds of questions that I want to answer. These are, or the kind of, if you had an opinion on these things, those are the kinds of opinions that I would want to hear, right? Because this is information that we know has an impact on markets. We're trying to predict future orders based off of, money flows and macro factors and stuff like that, right? This is the good stuff. We want to talk about this more. All members must provide brokerage statements. Hey, thank you very much, eCarve. I'm not always super interesting, but I don't know. I feel so inadequate today. It's because Ace left in a huff. The other thing is that I watched Future Trader 71's stream the other day, and he was saying, it was about how do you take it more serious, and he was like, this or not how do you take it more serious, it was how to be more professional trader. And he was really just sharing the stuff that he shared in so many Futures IO webinars. By the way, I have to say, FT, if you're listening, I'm going to say all of this stuff and then they're going to be like, FT, Seth was talking about you. FT, make real VODs, like doing like a web presentation with slides and everything is great, but I think you can do better. I think, and I mean, I'm not saying that like it's beneath you per se. I'm saying making videos is really hard, and you might think that it's that you don't have the skills to do it. But if you go in and you just get a cheap camera, like, a Canon M50 or whatever they're called, and you made a video and it was like an actual edited video where you gave that kind of information and you made it engaging and stuff, and you edited it and you edit yourself or you pay somebody to do that, those videos would just take off and you get so many more views. But anyways, he was saying, like, when we're more serious, it's not just like people that trade on YouTube. And I was like, oh no, is he talking about me? Because sometimes I'm not serious enough. But sometimes I'm trying to fill airtime because I really just don't want to trade at that time. I don't have an edge. You should create a course. Well, I've always said that, like, you'll never see me create a course, but I'm certainly not going to do something where I'm going to like create the Seth School of whatever, and in order for you to get access to it, it's going to be like thousands and thousands of dollars. But I am writing, I do from time to time write some of my stuff down and into like what could be a book. And I would like to publish a book. I think that would be the best thing. But maybe if somebody said, oh, we really like your book, we would like to have it, and like, I gave it to Jigsaw to sell or something. Like, maybe that sort of thing could happen, but probably not anytime soon. That's probably like 5 to 10 years from now, right? I do think one of the things is that, and here's the problem with me creating a course, is I think that I've found a lot of really good information that retail traders would benefit from. And some of those things are edges I want to keep to myself, but some of those things are like, I really want retail traders to know about them so that we can actually have discussion about it. So I want to talk to people about this stuff, and I want to take it further. And you can't do that when nobody in retail even has a clue that it exists, right? Because I learned this stuff from somewhere, right? And there's books and research out there for that sort of a thing. So it's not like the information is out there. So if I'm writing about it, the only reason that I should be writing about it is to get the information out there, because I can be persuasive and I can be more influential and I can get people to see it. But then the issue is, right now, it seems like I'm not doing a very good job at that. I'm having a very hard time getting people, even some of my most consistent followers will give me pushback on some of these things and are leading me to believe that either the concepts themselves need more development or my communication of the concept needs work. You should make a course on live streaming. I wish. I follow Harris Heller's YouTube channel, and he does that so much better than I ever could do it to do how to live stream. Anyways, so go and do that. There's tons of YouTube channels about that. All right, I got to get going. I will see you guys on Monday. I probably will be doing a little bit of programming next week. It is going to be kind of a shortened week, so it'll be weird. I'm not going to be streaming on Thanksgiving or Black Friday. Okay, so I'll see you guys next week. In the meantime, stay profitable, friends.